Hey there, investors and stock market enthusiasts. Today, we're diving deep into one of the hottest stocks in the tech industry, Supermicrocomputer, Inc., also known as SMCI. This company has been making waves in the market, and its stock price just saw a 3.8% increase. But is this just a short-term surge, or is there a bigger story behind it? Stick around as we break down the numbers, analyze expert opinions, and explore what the future holds for Supermicrocomputer. On Wednesday, during midday trading, shares of Supermicrocomputer experienced a notable uptick, climbing 3.8%. The stock reached a peak of $44.99 before settling at $42.37 by the end of the session. What's even more interesting is the trading volume. Approximately 42.9 million shares changed hands. While that sounds impressive, it actually represents a 45% decline from the stock's average daily volume of 77.75 million shares. This raises an important question. Is investor interest cooling off, or is this a temporary fluctuation? We'll explore that later in the video. Wall Street analysts have been actively reviewing SMCI, offering mixed perspectives on its future. Some experts believe the stock has strong growth potential, while others suggest a cautious approach. Let's take a closer look at recent ratings. Loop Capital reaffirmed its buy rating, suggesting confidence in SMCI's long-term prospects. Goldman Sachs revised its price target upward from $32 to $36, but maintained a neutral stance. Barclays initiated coverage with an equal weight rating and a price objective of $59. Wedbush reiterated a hold rating, signaling uncertainty about near-term movement. CFRA, on the other hand, upgraded the stock from hold to buy, setting a price target of $48. These varied ratings highlight the mixed sentiment surrounding Supermicrocomputer. Some see it as a buy and hold opportunity, while others urge caution due to potential volatility. Let's break down SMCI's financial health to see what's fueling investor sentiment. The company's 50-day moving average is currently at $37.41, while the 200-day moving average stands at $38.32. These indicators suggest the stock has been hovering around a stable range, but is now experiencing upward momentum. In terms of liquidity and financial stability, here's what we know. Debt-to-equity ratio, 0.32, indicating a low level of debt relative to equity. Current ratio, 3.77, suggesting the company has sufficient assets to cover short-term liabilities. Quick ratio, 1.93, reinforcing strong liquidity. SMCI's market capitalization stands at an impressive $26 billion, and it currently has a price-to-earnings PE ratio of 21.91. This PE ratio suggests the stock is moderately valued compared to earnings, making it an attractive option for growth-oriented investors. Insider transactions often provide a glimpse into how company executives feel about the stock's future. Recently, two major insider trades caught investors' attention. Robert L. Blair director sold 19,460 shares at an average price of $42.58, totaling approximately $828,600. George Kao, senior vice president, offloaded 71,720 shares at $50.48 per share, generating $3.62 million in proceeds. Following this transaction, Kao's direct stake in the company dropped by 78.67%, leaving him with just 19,449 shares. While insider selling isn't always a negative sign, it does raise some questions. Are executives taking profits, or do they anticipate challenges ahead? In the past quarter alone, insiders have sold a whopping 137,473 shares, amounting to nearly $6.77 million. Such significant insider selling can sometimes be a red flag, but it's not necessarily a deal breaker. Investors should keep an eye on whether insiders start buying back shares, which could indicate renewed confidence. Beyond insider activity, institutional investors also play a crucial role in determining a stock's trajectory. Hedge funds and asset managers have been actively adjusting their positions in SMCI. Archer Investment Corp increased its holdings by 364.2% in Q3, acquiring an additional 448 shares to bring its total stake to 571 shares. Bell Bank entered the SMCI market with a brand new investment, signaling confidence in future performance. Meridian Wealth Management added SMCI to its portfolio in Q3 with an initial investment of approximately $270,000. Mizuho Markets Cayman LP also initiated a new position, contributing to growing institutional interest. ICICI Prudential Asset Management acquired shares worth $318K, showing international investor interest. Overall, hedge funds and institutional investors now own a staggering 84.06% of SMCI stock, indicating strong backing from major financial players. This level of institutional ownership can act as a stabilizing force, reducing the likelihood of extreme volatility. So, what does the future hold for SMCI? Here are some key factors to watch. As demand for high-performance computing and AI-driven solutions grows, SMCI is well positioned to benefit. The company specializes in data center hardware, which is becoming increasingly crucial in the digital age. Earnings reports and revenue growth will play a significant role in determining future stock movements. Strong earnings could drive the stock higher, while weaker than expected results may trigger a pullback. Rivals like Dell, HP, and Nvidia are also expanding their data center businesses. How SMCI differentiates itself will be critical. Interest rates, inflation, and broader market trends could impact SMCI's stock performance in the coming months. Supermicrocomputer is undoubtedly an exciting stock to watch. With a mix of positive analyst ratings, solid financials, and strong institutional backing, the company has a lot going for it. However, insider selling and competitive pressures are factors to keep in mind. What do you think? Is SMCI a buy, hold, or sell? Drop your thoughts in the comments below. If you found this video helpful, please give it a thumbs up and consider subscribing to the channel. Your support helps us continue to bring you in-depth market analysis. Thanks for watching, and I'll see you in the next video. Take care.